I like to say that everybody's got a SPAC and a dream. So what is your dream and how are you going to go about realizing it?
Well, we formed a team around this. I mean, I've been observing the SPAC space for a while, and I think it has developed into a really nice set of instruments that kind of fits the profile that I like as profile, which is basically something that looks for sustainable competitive advantages. So we formed a team. We looked into potential companies. Our focus is transatlantic. That's one of the differentiators. So we are fishing in the pond of North America as well as Europe. We believe that Europe, and particularly Central Europe, is very, very attractive, with Germany, Switzerland, Austria have a lot of interesting privately held companies. We started building a pipeline, started about a year ago, and around November last time we said we are comfortable, we can go ahead. In the meantime, we had built a team consisting of people that have deal-making experience, industrial backgrounds, and also knowledge about talent and being able to bring talent to the party, and a huge network.
Right. Klaus, of course, given how much money has been raised by SPACs thus far, there is a concern that the eligible candidates for them are going to, well, be bid up at the very least, perhaps beyond what is a reasonable value. Do you feel like, looking beyond the U.S., looking at the geographies you just discussed, that you're going to be able to find perhaps more worthy candidates?
We are pretty comfortable with this, and we would not have been here today and launch it if we hadn't reached that point. Because, as I said, we looked into potential targets starting about a year ago. We have a pretty deep target pipeline. Obviously, we have not been allowed to talk to anybody. The pipeline is now having about 2/3 of companies in Europe and 1/3 in the US. So to your point, I mean, I think this is a function of what you have been saying. The other thing that we believe is we wanted to set ourselves apart, I mean, by basically bringing something to the party that's more than just the blank check company. And that comes to a team that has deal experience, that has industrial know-how, that has capabilities to strengthen the team, to develop the company further. And we are looking at companies that we feel can create sustainable competitive advantages. So kind of like a proven business model at an inflection point where we see a lot of growth, and we can help people also in Europe to reach out to investors here in the U.S. and also benefit from the valuations that exist in the U.S.
Klaus, it's Morgan. It's good to see you. Just to dig into that a little bit more, in terms of an ESG focus, what are the parameters you're putting up around that? How are you defining that? And given the fact that you do have these deep industrial roots, is that the sector you're most focused on?
Okay, I'll start with the second one. The spec. I mean, actually, we originally started looking at do we exclude certain industries, and partially we did it through the ESG folks. I'll address that, But interestingly, I mean, I've worked over my lifetime, I've worked in many different industries, and also in the last years had an opportunity to look into even more. So it's relatively broad. We are looking at growth drivers, mainly growth drivers where we feel like, like online, like this, what happens in the supply chain, what happens around data, what happens around software. There are huge technology changes, and COVID has interestingly accelerated this change. ESG for us, I mean, we believe that one should not invest in anything that doesn't qualify under basically all of the ESG components, being on the environmental as well as the social, as well as the governance side. So this is for us a hygienic criterion. We didn't let anything into our target list that doesn't qualify on that end.
Shepard Smith here. Thanks for watching CNBC on YouTube.